Thank you for joining me. I'm Alex, and I want to talk about at home today. I've been wanting to make this video for a while because, as with many things, Jeremy mentioned it a few, I think, months ago. And I had a quick look at it and I decided it wasn't for me, so I didn't do it. But it's always been intriguing about why would he buy it, and then he sold it, and so he made it clear why he sold it. But I never thought that the fundamentals really looked enticing enough for me, so I never had a closer look, but that's what we're going to do today. So they do home decor retail, mostly brick and mortar, obviously. And I think that is kind of the problem here. Walmart does a lot of home decor, and they just bought art.com, I think it was. And they're wanting to do a lot more home decor, and so there's many other places that do the same thing, really. And I don't really think that the market is big enough for another major player. So overall, at this point, it needs to be amazing for me to have any chance of investing in it. Price is $4.37, which gives them a market cap of just under $300 million. So they're still pretty small for a retailer. Dividend is 0, and I don't expect that to change soon enough for me to factor it into any prediction. Current revenue, $1.1 billion, earnings, $48 million, both up significantly, PE of 7, which is pretty amazing. Forward PE/NA, which means that they don't expect to have a profit next year. And usually I'm the only one that puts a PE in the negative on a video, because most reporting sites don't report negative PE, but I still think it's very important to know what the loss is relative to the share price. But no one even lists a forward PE or a prediction of how much money they're going to lose. So I really couldn't get that factor, so I couldn't include it. Total assets, $1.7 billion. Total liabilities, $1 billion, which gives them a total stockholders' equity of $711 million, which is up significantly from the previous year, so 15-ish%, 20%, somewhere around there. And so overall, I would say that the stockholders' equity in relation to the market cap kind of makes it interesting, to say the least. But overall, the stats are not really something I would go for. Now, PE of 7 is obviously amazing, but forward PE negative is not great. Earnings growing significantly, again, next year being negative, doesn't help me at all. Revenue growing 10%, not really that helpful. And so I think that really the only thing they have going for them right now is that the stockholders' equity is double the market cap. And so I think that if we just looked at those two figures, then we might have a buy here. But the other question is, in a liquidation, how long would it take? How much money would we get? And would it really make sense to buy a stock assuming that it will get liquidated and then we can make money off of that? And for me, that's a no. So overall, I would say it doesn't grow enough for a growth investor. It doesn't have a dividend for a dividend investor. And for a value investor, the forward PE being negative is certainly a drawback that pretty much no value investor would ever look at the stock. So overall, if you are investing in hopes that they will be bought by some company, then I kind of think that could make sense. If you're hoping for liquidation, then that could also make sense. But I don't expect to get back the $700 million that's listed in assets, because it's hard to liquidate things and it's hard to know the current price of things while you're liquidating them. So I think that might be slightly inflated. So overall, I would say don't buy the stock, and maybe wait for the next earnings report and see what happens after that. And if they can turn things around and the price doesn't go up significantly until then, it might be reasonably interesting. But for now, I don't think that anyone should invest in this. That's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.